To the rest of the news on the local market now, and earlier I spoke to Charlie Aitken from Southern Cross Equities. Well, Charlie Aitken, a fairly lacklustre day on the surface. Was that really the case?
I think actually lacklustre is the right word, Ticky. I mean, the market's seemingly winding down a little bit into the Easter/Anzac Day break a bit early. Look, the market wasn't terrible, though. Put on 10 points, banks up a little bit, Telstra up a little bit, and the resources holding us back. But it was lacklustre, that is the right word.
Metal prices seems to have been all over the place recently. Has this weighed down the miners somewhat?
To a degree, yes. The metal prices have come off their peaks a fraction, but that's the traded metal prices. The harder to trade metals like the bulk commodities, iron ore, coking coal, thermal coal, pretty much making record prices, but it's the base metals that have come off a bit, mainly on a recommendation from Goldman Sachs out of New York to take profits. That has weighed on the sector a little bit, but you're starting to see some bottom fishing as well, so not a huge influence.
And what sort of impact has the monetary policy in China had?
Well, the market seemed to see through that a bit today. Yes, resources underperform, but the monetary tightening in China has now happened on about 6 occasions. The market's seeing through it. They're seeing it as a sign of strength in the Chinese economy, which is probably right. So trying to look through it.
Now, Leighton's has received a please explain from the ASX after last week's announcement of its massive full-year loss. How did they respond?
Well, they quite rightly got the please explain from the ASX. I think that caught a lot of us off guard. Well, they said they were in compliance with ASX listing rules and continuous disclosure, and explained how they only took the decision on the write down at the board meeting, which the stock was then put in trading holds. But, I mean, look, the people will debate this till they're blue in the face. I suppose Leighton were always going to say that. And here we are, and the stock's down another 1%. The market is dealing with a huge downgrade, actually.
Yeah, it presumably is something very difficult to prove anyway.
Well, you'd have a lot of trouble proving it, but I mean, you couldn't have expected any other response from Leighton today. But I mean, the shareholders know what the response is. The shares are down about $6, and they're the ones copping it.
And Lynas, I see, the rare earths miner, is looking down the barrel of legal action.
Yeah, the market doesn't like related party deals at the moment. You'll notice a company called White Energy walked away from a Cascade Coal transaction last week. This one's a little bit different, where Lynas shareholders are saying they're selling a very small asset at too low a price to a somewhat related party in Forge. I mean, you've got to put this in context. Lynas is a 4.2 billion market cap company, and the deal is worth 20 million. But it seems a couple of shareholders are not happy with the valuation of it. It may go a little bit further.
And finally, gold hit another record high overnight. Just relentless demand for it, Charlie.
Seems so, Ticky. The gold price is following the silver price. The silver price is about $42 an ounce, which is an all-time record by a huge margin. Gold seems to be getting the best of both worlds at the moment. If there's a bit of inflation in the world, the price goes up, and if the markets are worried, the price seems to go up. But the biggest driver seems to be the US dollar, which is starting a new leg down, and you can see that in the Aussie dollar cross rate versus the US dollar, which is up near 106 as we talk tonight. So gold looks to me like it wants to go higher, and we'll keep keeping all the sceptics off guard.
Charlie Aitken, thanks for joining Lateline Business.
Thank you, Ticky.